Okay guys, welcome back to the channel. Matt with Green Bar Trading here. Welcome back to another weekly watch list video. Going to go over everything you need to know for the week ahead in the stock market. So up on the screen there are your earnings reports for the week. I'm looking at Micron after the close on Wednesday, also Tuesday after the close with Costco, and then on Thursday after the close with Nike. Interested in those reports. I'm definitely going to be keeping an eye on those, see how the consumer is doing with Costco and Nike, and then Micron, just with tech in general. Going to see how that one is going as well. So that's your earnings there for the week. Okay, now going over to our economic calendar, what I'm seeing for the coming week is your initial jobless claims, your GDP, and Fed speakers on Thursday. All right, we have some Fed speakers here on Tuesday as well, but then on Friday, you have the PCE. The core PCE is what the Fed is looking at for inflation. So that's their main indicator for that 2% inflation that they want to get down to is that core PCE. So this is a huge report over on Friday. All right, so just to recap here, the economic calendar for the week. Monday, nothing is scheduled. Tuesday, you have a Fed speaker here at 1:30, home sales at 8:30. On Wednesday, the durable goods. Thursday, like I said, the initial jobless claims, GDP. These are big things to look at for the economy, as well as the Fed speaking. And then on Friday, the PCE is going to be everything. All right. The most important thing for this entire week is the core PCE report over on Friday. Going over to our sectors and how they performed relative to each other on the week, you have consumer cyclical, real estate had a rough time, technology did not do much better, consumer defensive, energy and healthcare, utilities even at the top there, all right? That continued rotation into the defensive plays is what we're seeing perform better than what we saw for the first part of the year there with technology and consumer cyclical communication services with Google, Facebook, Meta, those stocks. All right, so that's what we see here year to date. Still communication services, technology, consumer cyclicals leading the way by a huge margin. All right, which is just telling me that there could be a lot of room for technology to come down and still look good. All right. So that's the thing. It got so ahead of itself, the QQQ, that there's a lot of air under that market. You can see here with technology up 30%, communication services up 34%. There's still some room for a pullback, and you'll still be in a nice uptrend for the year. So just keep an eye on that. All right. Now going over to our compass, the SPY. And what do we see? So in our last weekly watch list video, we were looking at this 50-day moving average and the fact that it could not hold up over the 50-day, which is a huge indicator on the daily chart. So we pointed that out. We saw a nice pullback in the market. We're still in an uptrend though. When we made that video, I said, watch this green line here, right? This is that uptrend for the year. There's a possibility that we can pull on back. We also have this volume indicator here with a huge vacuum, all right? A huge gap here that if it does break down, we can revisit this 200-day moving average pretty quickly, all right? You can see here, there's been no volume for the whole year where we're about to go. All right, so I would expect some more pullback here in the SPY. Looking at the Qs, also on heavy volume. Let me go back to the SPY really quick. We like to look at the volume here. And the volume the last 3 trading days has been very heavy. Big volume showing big moves down means institutional investors are selling, right? So that smart money is selling. They were buying here. This is something I point out all the time in March. A lot of buying here. And then looking like we're starting to roll over just a little bit. Still in an uptrend, still over the 200-day moving average. But you can see here the 50-day is starting to turn down. The 20 EMA is starting to turn down. That's where we're at right now. On the Qs, right? You can see here the volume the last couple days has been pretty negative, high volume, down days in the market. And this one also with the volume profile can definitely come down to this 200-day moving average. I mean, look at this huge gap here of volume. You had a ton of volume up here, right, while we consolidated. Now it looks like it's breaking down from this consolidation. And the only thing that we see here for a nice support level is, you know, around this 320 area. For the last year, there's been a lot of volume here in this area, also with that 200-day. Now, that's a long way down. So, you know, I would definitely monitor your tech, your QQQ, your tech holdings, and just see here how we react on some pullbacks. It could be also a good time to buy, being that the RSI is becoming to be oversold. So if it does pull back pretty big, it could be a time to buy also. So just keep that in mind. All right, that's the QQQ. Looking at the VIX, this is where we're at right here. For the past year, this 2023 support has held up good, right? So every time it's come down here, we've bounced up, meaning the stock market is going down. So that's where we're at right now. This 1817 area has been pretty much that resistance. If it ever broke through here, that means that the market is continuing to go down. So watch the VIX here. It's looking pretty negative as far as when the VIX goes up, the market goes down. So you've had that move from 13 all the way up to 17. How is it going to respond around this area here? That's what we should be looking at. So that's the VIX right there. Just so wanted to come on here really quick, give you guys the update where I see the market possibly going. So please hit the thumbs up for the video, and I'll see you on the next one. Take care, guys.